The SPY here, this is the S&P. Notice the bounces coming in. I just want to point this out very clearly. We know we had this area of support. We know we have this area of support. We filled that gap. Notice the retrace back up. This is your neckline of your head and shoulders. So again, this will be a little resistance. This point right up here, that neckline of the head and shoulders. Let me zoom in on that so you guys can see it, right? So again, that's what we want to look at right there. All right, so this will be resistance at around 436. I actually think the markets are going to go above that. And let me tell you why. Everyone knows about this head and shoulders. The more people that know about the head and shoulders, the more likely that pattern fails because it puts people too bearish on the markets. And so for me, I actually would like to see us get above this level because then the head and shoulders gets negated, right? And then more people go bullish, which then gives us a higher probability of starting to nail the markets on their reversal. Where might it go? You have a gap fill right here, which is right around 438 or so. But I even think you could go a little bit higher if I kind of clean out this chart here and we bring it back up. I actually think we could see a move up into this line right here. So again, you guys are watching me analyze this chart real time here. And again, the level here, pivot, pivot, pivot. Imagine a bounce all the way up here to 445 on the SPY. Guess what? Everyone, if you go up there, think about what the media is going to be talking about. What is FinTwit, Financial X, or whatever we call it these days. Everyone's going to be like, oh, this market's breaking out. It's going to all-time highs. All of that vibe and that bullishness then would then make us say, wait a minute. Everyone's getting too bullish and we're into resistance. What do we want to do? We want to fade that and start looking for a retrace, knowing the bigger macro picture. By the way, the bigger macro picture, I've shown you guys this a zillion times over, but it is one of the most amazing charts out there. I'm going to the NASDAQ composite here, okay? Now, if we go to the NASDAQ here, and let me get rid of this trend line, we can clearly go to this monthly chart. Okay, so this is your monthly chart of the NASDAQ. We're going to quickly go over this. We have this move up. So this was the COVID low. We had a crazy vertical move to this high, retrace to the October lows, and then we have so far a lower high. Remember that pattern. What I want to do now is I want to go all the way back to this period here. Okay, now if we go back to this period here, and let me just refresh the chart so you guys can see it. This is your dot-com bubble chart. Now look at the dot-com bubble chart. Let me get rid of those lines there. Basically what we had was we have this low, which was just before the dot-com bubble. We have this high right here. We had the pullback and the bounce right there. And then look at what the markets did afterwards. It's a perfect replica of what the NASDAQ is showing us on the charts. And so listen, I am a creature of past history giving us a guide to the future. Now again, does it mean that it's going to replicate 100%? No. Does it mean it's going to replicate at all? No. But we know that when we look at past history, because humans were trading this and humans are obviously trading now, we know that pattern replicates generally over time. You can go back to the 1940s, the 1930s, the 1920s. The same sort of things that were kind of happening with greed and fear, and again, roaring 20s, the Great Depression, all of that stuff, it's all emotion-based. Buyers and sellers freaking out, getting greedy, freaking out, getting greedy. Therefore, generally, charts tend to repeat. It doesn't guarantee it, but it certainly gives us a guide, a probability that something is favored. Okay,